Hi, it's Gary here, and I just want to introduce this webinar series I'm shooting with a friend and client, Carl Brodie, certified financial planner. He's worked 15 years in the tax and insurance industry. He has worked with the ultra high net worth family office, and he's had so much experience working with the ultra wealthy in how to structure their taxes and structure their finances. And he also works with a lot of entrepreneurs in helping them with cash flow and how to minimize tax. We are going to be shooting monthly webinar shows that go into more depth about specific problems that entrepreneurs face and how there are certain tax structures and techniques that help minimize tax and maximize income and cash flow. So stay tuned. Don't forget to leave comments below if you have any questions. And for sure, his contact information will be at the bottom of those videos, so you can contact him directly for specific advice regarding to your situation. Great to have you on, Carl.
Hey, Gary. It's great to be on. Thank you very much for inviting me.
Maybe I'll let you do the introduction of what you actually do.
Essentially, I do fairly customized work with a lot of my clients, and most of my clients are entrepreneurs, they're business owners, and they've got a corporation. And there's a few issues that they're facing. Generally speaking, they're facing a tax issue. They're often facing a cash flow issue, and they're trying to figure out a way to build up wealth over time and build up a family dynasty in the long run. So I help people get to those solutions using various tools.
Are there general problems that your clients face that you specialize in?
They're working year after year. They're working in their business because of the expenses that they've got in their business, because of the tax that they're paying every year, and because of their life expenses. They end up really not making a lot of money or saving a lot of money. They make a lot of money every year, but they're not able to save the money every year. We alter some of the structures and the cash flow for those people and give them a way that they can save money over time.
Can you give us some examples of specific problems your clients have faced? And then what strategies did you use? Like, can you give us some examples or case studies?
I had one client. He actually was very, very good at reinvesting money that came into his corporation. He was good at making money, and he was good at investing money. He saw a lot of different opportunities. Again, it's in the real estate space, and he had built up quite a net worth quite early in his life. And the key for him was always, how do I find access to capital? How do I get more access to capital? Yes. So what we did is we've got certain relationships with the bank, and we've got certain products that we can put in place where they will actually start building up more of a net worth, more of a collateral base that they can start borrowing against to do for him. It was further real estate purchases. So what we did is we kind of fixed him up a little bit in the way his assets supported lending, kind of made his assets more collateralized so that he could go out and he could raise more capital. We also have some older clients, and a lot of older clients are looking at ways that they can pass down the assets to their younger generation.
Yeah.
One of the issues that a lot of people face when they're doing their estate planning is that their corporate assets are going to be double taxed on death. So when they die, they've got a corporation, and that corporation will have a value. Generally speaking, they started the value of the shares when they started, maybe is $100 a share. And they built this corporation over their whole life. And maybe those shares are now worth $10,000 a share. Okay. So now we've seen this large appreciation in the corporation. When they die, they're going to have a deemed disposition on that. So they're going to have to pay the capital gains tax. And then any assets that come out of the corporation on death, they're going to have to pay dividends tax on those assets. So there are actually two taxes that they have to pay on death. And it's anywhere from 2/3 to 3/4 of the value is going
Wow.
to go in tax when they die. So we don't have an actual estate tax here in Canada, but corporate business owners are very, very highly taxed when they pass away.
So what strategy do you use in that scenario?
So essentially, what we use is a strategy called an estate bond. That might not mean too much to you, but
Okay.
we put an insurance bond inside the corporation.
Yeah.
So any assets that they've got, any liquid assets go into the insurance bond
Okay.
so that when they die, all of that money will be a death benefit, an insurance death benefit. So it will come out of the corporation tax free.
Oh, wow.
So just by changing the way they identify the assets within the corporation, they no longer have to pay any dividends tax on that money that comes out.
When somebody comes to you and wants to work with you, they're probably thinking, well, wow, Carl is such an expert in all this stuff. Like, what does it cost to talk with Carl? And what is it, it probably costs a lot of money
Well,
for
I'm
consultation.
happy to talk to people and just to see whether we're a fit and to
Yeah.
see whether there's anything that we can do there. So,
Like, how do you get paid? Do you get paid by the insurance lender, or do you get paid by like per hour, or?
yeah, so generally speaking, there is going to be some kind of insurance solution that gets put in place if it's applicable.
Mhm.
And if it is, the insurance companies do pay me for my work.
Oh,
So
okay.
I don't expect any kind of payment from the client. I just get it directly from the insurance
Oh,
companies.
that's typically the case, right?
Yeah.
Okay. And then I had another question. Like, it sounds like this works really well, but like I haven't heard so much of this in the last few years in my business. Like, how come I haven't really heard of this? It's not that common.
Yeah, I think part of the reason is it's not that sexy. When people are talking about the investments they've made or the various things that they're doing, usually they're talking about, yeah, I bought Tesla stock and it went up 100%, or hey, I've got these cool NFTs that I bought, or a real estate purchase. Of course, we know how real estate's gone up in Vancouver over the past, what is it, 30 years? You would know
Yeah.
better than I would. So a lot of the time when people are getting excited and talking about the things that they're doing, when we're talking about this more kind of complex planning and we're talking about putting the foundations in place for them for their future,
Mhm.
it's not as easy to describe and it's not as sexy as a lot of different investments that are out there. But actually, you'd be surprised by the number of plans that are actually going forward with this kind of strategy. This kind of strategy has become more and more popular over time.
Yeah.
It's just not something really that people are talking about as much as the more exciting financial investments out
So
there.
basically, you help them structure their finances, and sometimes it's including like putting their money in insurance policies. Like, what are the risks involved? Like, is it a very conservative risk or aggressive risk, or?
Yeah, so any of the assets that we use are always extremely, extremely conservative. So these assets themselves, there's not really a lot of risk associated with those. But what we will do is we'll assess the risk tolerance of the client that we're working with.
Yeah.
If the client wants to push things a little bit further, we're generally willing to push with them. So we will get a little bit more risky with the strategies that we're putting in place, but we want to be really, really aware of the client and the kind of goals they've got, the kind of knowledge they've got, and the kind of risk that they're willing to take. So we want to have very real conversations with our clients as to where they want to take this. And really, the way I see it, I take my cues from my clients because it's really their business, it's really their finances that we're trying to figure out, right?
Okay. And then like probably a lot of people who know me might be like, oh, well, Gary, like, why don't I just put everything in real estate? What would you say to that?
Yeah, so I would say it's not such a bad idea to put everything in real estate because real estate has really performed in Vancouver. I expect real estate will probably continue to perform here in Vancouver anyway. So on its surface, I would say, hey, it's not such a bad idea to put your money in real estate. There is one issue with real estate, and that is that it's not terribly liquid. So one thing that we see, especially with a lot of high net worth people who are doing something more, maybe a little more aggressive, like commercial real estate, is that they'll get a real estate portfolio inside their corporation, and that's all they will do for a long period of time, and it works great for them. Maybe they face a little bit of an issue with liquidity while they're growing it, but generally speaking, while they're growing it within the corporation, they don't have to worry about the liquidity that much because maybe they're getting rent or maybe they've got other business that they're doing at that time. The issue comes later on when they break down that corporation, and for whatever reason, maybe they sell the corporation, maybe they end up passing away and the corporation is deemed to be disposed of.
Yeah.
And they have to take those assets out of the corporation at that time to pay the tax on death or whatever it is. Generally speaking, it is a tax bill that they have to figure out. And now they've got all these illiquid assets. Maybe the real estate market has been doing really well, but maybe in that year it goes down 20, 30%. Maybe that's a little bit much, but pretend it goes down 20 and 30%. And all of a sudden they have to liquidate all those assets. And when they liquidate those assets, they have to pull them out of the corporation and pay tax again on that.
Or so what if they just, even if they have to liquidate one asset, and that's like, what if they didn't want to liquidate at all? They wanted to keep it, but they have this big giant tax bill that they have to pay.
Exactly. So, and maybe the banks aren't so happy in maintaining all the mortgages they've got with the next generation. Maybe they were really happy with the relationship that they had with the parents, but they don't really think the kids are the perfect clients for them. So maybe there's some kind of adjustment in what the bank is willing to do with this next generation also. So there are things that need to be taken into consideration in a real estate investment that, and I would still say as a foundation, a real estate can be a very good foundation for the corporation, but there has to be some kind of liquid component to that safeguards that real estate in the event there has to be some kind of liquidation.
As you've seen, I guess, the ultra high net worth, they have their real estate, but they'll also have like diversify their investments into stocks, into private equity, and then they'll have a tax structure to basically cover and like mitigate any risk, right?
Right. So just have the plan in place so that when the time comes and maybe you pass away, maybe you sell the corporation, whatever it is, at that time, you know where those tax dollars are going to come from. You know that this is going to stay intact, even though you've got these taxes to deal with.
We're doing this monthly webinar series with Carl. And so today was just a brief overview of what Carl does. And Carl, can you give us some tidbits, some teasers of what you'll talk about it more in depth in future webinars?
Yeah, well, I actually wouldn't mind getting into a little more detail as to how we would actually put one of these plans in place.
Yeah.
Maybe get a little more in depth with a case study so that we can kind of talk step by step how the whole case progresses.
We'll put in some real numbers and stuff like that.
Yeah, we can put in some real numbers so that we can really get an idea of the value of putting in a proper plan from especially a tax perspective, but generally from a planning perspective.
Definitely contact Carl if you want to have some specific questions answered related to your specific situation. There is no cost. Yeah, so I'm really glad that we had this conversation, Carl. I can't wait for our next webinar next month. And
yeah, I really appreciate it, Gary. Thank you for the time today.